Hello fellow traders, you're looking at my E-mini chart from Wednesday, May 28th. And the market really didn't move too much apparently, but still in all put in just about the 66 points forecast by the calculated trading zone. And I'm going to show it to you, and if I clone the trading zone to the intraday high, right over here to the intraday high, the market just about came down to the forecast low, traversing almost all of the 66 points. But nevertheless, the market really was sort of lethargic on Wednesday, really didn't go anywhere. But nevertheless, if you traded the trading zone and you calculate and you transpose the trading zone to the early intraday high, you still were able to pick up a good 20 points. There are 10 points between each horizontal line on this chart. But let's move forward to Thursday, May 29th. I'm going to remove my clone. And so I'm going to just note that the aftermarket prices rose way up and traded basically way up here overnight. And so for Thursday, May 29th, I calculated the numbers, and I'm going to show you my trading zone, my chart. And for Wednesday, I put in the numbers, and the trading zone was forecast to be 61 points, 58.98 resistance, support rather, and 59.59 resistance. So going back to the chart, we draw out our chart, 59.59 resistance, 58.98 support, and of course, you know, I always put in the previous day's close, 59.02, and you should do that as well. So this is how I set up my chart, and I only have my stochastics at the bottom of the chart to give me a little bit of an inkling of when a good time to enter would be. But I use this together with the 6 trade setups, GST, TMC, gap, support and resistance, trend, time and price, momentum, and candlestick, because the candlestick trade played a little bit of a role in the Thursday trading as well. And I'm going to take you through Thursday starting at 6 a.m. Now notice that after that on Wednesday, prices rose up after market, stayed way up over the calculated trading range for Thursday. And so let's start the chart. Let's start on a 3-minute candle movement toward the start of the day on Thursday, May 29th. And here we go. We're just about at the 8 o'clock hour, and prices, of course, the market opens at 9:30. This is the S&P. Of course, you're looking at the E-mini chart, but I'm going to stop the chart right at the open. So right about here at the open, prices are trading just about toward the high end of the trading zone, toward the resistance at 59.59. So it's an indication that if the trading zone is correct and prices trade within the calculated trading range, it should traverse the 61-point calculated range for the day. So let's see if a trade using the trading zone is going to bring us some success. Okay, so prices started out, took a big dive at the open. This is the 9:30 candle, friends. And that 9:30 candle was a good 15 points. Again, 10 points between each horizontal line on this chart. Took a quick dive down. And so if we believe that the trading zone is going to give us an accurate picture of where the market is likely to trade, we can take a trade somewhere around here early on. Now remember that I've been advising that because of market volatility, the trading zone should be just watched. Prices should you should wait till about an hour after the market opens to place a trade to forego the early morning volatility. And so using the trading zone chart and not jumping on right away might be a smart thing. Of course, you're going to give up some points if the trading zone is correct, but remember that we want to be conservative in our trading and avoid or eliminate risk as much as possible. So let's continue. As the day progressed and the market dove down toward the bottom of the trading range, reacted a bit, but then apparently, remember, the previous day's close was down at 59.02, and there we go. I'm going to stop it right over here. And notice right at about midday, prices not only traversed virtually the entire end of the trading zone, the entire range of the trading zone, 61 points, and then some. But notice this candle right here at 12 o'clock, this 12 o'clock candle. Now, this is the candlestick trade setup. Now, again, the 6 trade setups that I always talk about, I teach in my course, GSTTMC, and C stands for candlestick. Now, the candlestick that I'm pointing out here is the hammer. And the hammer is where you have a real body and a shadow 3 times the size of the real body. And that hammer is at the bottom of a decline, all right? Just like a shooting star would be at the top of an upswing, hammer is at the bottom of the decline. So we can look at this candle right over here and say, well, is it at the bottom of a decline? Yes, it certainly is. Is the shadow 3 times the length of the real body? It certainly is. So where is the market going to go from there? So if you recognized this candle, let's say you didn't trade any of this, you missed it, and you recognized this candle at midday and you jumped on, would you make money? Yes, you would make money. And let's go throughout the day and I'll prove the point. Now again, remember, once the market trades throughout the trading zone for the whole end of the trading zone, and you're using the trading zone as an indicator of where to place a trade, where to get on, when to get off, you get on, you get off when the range is fulfilled. And so using this candle, you'd still make a good 20 points, right? 20 points. Nobody's going to be disappointed with 20 points. Forget about the trading zone giving you 60 points, which is a wonderful trade, of course. But even if you didn't catch the whole 60 points, you could catch 40 points, not too shabby by anyone's measure. But the candlestick trade setup, bottom of the decline, long shadow, 3 times the length of the real body, you have a 20-point day, 20-point profit. Let's continue for the rest of the day. And of course, you wouldn't be trading the rest of the day because we fulfilled the candlestick trade and we also fulfilled the full range of the trading zone. So that was our trade for Thursday, May 29th. And so everyone should be pretty happy with that. The day ended up basically the prices meandering around toward the middle bottom of the trading zone. And so that was our trade for Thursday, May 29th. I hope you learned something in this video. Thanks so much for watching. Use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.